I want to quickly talk to you about the Parent Plus loan and everything you need to know about Parent Plus loans. I will really dissect everything for you today, okay? So here's the approach I want you to really pay attention to. When you think about Parent Plus loans, I want you to think about an opportunity for you to help pay for your child's college tuition, for instance, okay? So a federal Parent Plus loan could be really a great financing option for you. If you have kids, there are really trying to really get into college or even university. So the Department of Education offers Parent Plus loans to parents of a dependent undergraduate student. So that's really good. And what's really cool about this loan is that you can use this loan to cover your child's remaining cost of attendance, ideally after exhausting all other avenues of financial aid, including scholarships and grants. However, expect a higher interest rate and fee than you will find on other types of federal student loans. And if you have excellent credit, private parent loans. Okay, so that's really the gist of a Parent Plus loan. So now, how do Parent Plus loans really work? Let me really talk to you more with granularity about the whole process. So when you think about a federal Parent Plus loan, think about a type of student loan designed for parents of dependent undergrads. You can use a Parent Plus loan to cover your child's full cost of attendance, minus, and this is important, minus any other financial aid they have already received. So what happens here is that the Department of Education will do the math, making sure that they actually deducted whatever financial aid the child has already received. So Parent Plus loans generally have more repayment options and more robust consumer protections than private student loans. That's for sure. Okay. So if you borrow, let's say, a plus loan, the Department of Education will send the funds directly to your child's school to use on tuition, fees, and other mandatory charges. Okay. So that's important. You cannot get the cash yourself. So what happens after that is that the financial aid office may send any leftover amount to you or with your authorization to the student to use on additional costs. More ideally, you could also use this remainder to start repaying the loan. So that's really good. One thing you need really to remember here is that if you want to postpone a plus loan repayment, you can actually request a deferment while your child maybe let's say is in school, or and you can do so after 6 months after they graduate also. If they drop below half-time enrollment or leave school, you also can have the opportunity to actually ask for a deferment. Otherwise, you'll have to start making payments on your loan immediately. Now, even if you request a deferment, consider making interest-only payments from the get-go. Parent Plus loans starts accruing interest right away, and if this interest will capitalize or be added onto your principal balance after a period of deferment ends, this could be really problematic for you. So the best way to really think about a Parent Plus loan, especially the repayment phase, is to start paying right away. Let me walk you through the pros and cons of Parent Plus loans. So first, the positives. So the loan limit is up to the student's full cost of attendance. So you have a lot of possibilities there. You have also a fixed interest rate, so that's really good. You don't have the double digits you have like with private student loans. You have multiple repayment plans. You have deferment, forbearance options. So that's really good to sort of ease the let's say the pressure on your budget. You have federal loan forgiveness eligibility. So if something were to happen, if you were to lose your job, if something were to happen, you can really ask for a federal loan forgiveness. And it's also possible to refinance and transfer it to a student with a private lender. So you have that possibility there. What about the cons here? Well, there is a credit check requirement. So they'll check your credit. They'll do a hard pull. You have a relatively high interest rate and also fee, even though you don't have the 20% you have with private student loans sometimes. And you have an income contingent repayment plan, which is really requires consolidation. And this loan, the parent Plus loan cannot be transferred to a student via the federal government. So this is something that you really have to be aware of, okay? But overall, Parent Plus loans have virtually no borrowing limit, making them a useful option for covering a gap in funding. They have a fixed interest rate that stays the same over the life of the loan and are eligible for various repayment plans. Okay, I'll talk about the repayment plans later on. So when I speak about repayment plans, very summarily, I'm speaking about standard, graduated, and extended. And also you have the income contingent repayment. So if you consolidate with the government first, and those loans can also qualify for loan forgiveness programs such as public service loan forgiveness. Let me go more granular here. I want to talk to you about Parent Plus loan requirements. Okay, what should you know this year if you are interested in a Parent Plus loan? What kind of requirements should you meet? First of all, you need to be the parent of a department undergraduate student. Okay, not department. Sorry, you need to be the parent of a dependent. So you gotta have an undergrad who is dependent on you for all kinds of expenses. Okay, that's the first criterion. Number two, you need to meet general requirements for federal financial aid. And number three, you need to have a relatively clean credit reports. So let me go a little more granular. So when I speak about being the parent of a dependent undergrad student, plus loans are available to the biological and adopted parents of eligible undergrads. Step parents can also qualify if they are married to the custodial parents and their financial information appears on the student FAFSA. So if their financial data is not appearing on the student's FAFSA, they're not going to qualify. No matter how tight the couple is, I mean, no matter how related they are, how long they have been married. Okay, that's for the first criteria. Second criteria, you need to meet general requirements for federal financial aid. This includes being a U.S. citizen or eligible non-citizen with a child enrolled in an eligible degree or certificate program and who has completed the FAFSA. The third and final criterion is that you need to have a relatively clean credit reports. So adverse credit could mean having delinquent or charged off debt of more than $2,085 in the past 2 years, or default, bankruptcy, repossession, foreclosure, wage garnishment, tax lien, or write-off of a federal student debt in the past 5 years. So if you have, let's say, adverse credit, you could still qualify by applying with let's say, an endorser, or sufficiently explaining your circumstances and completing actually a credit counseling. So the federal government will work with you to make sure that you are basically taken care of. But if you have bad credit, you actually need more, let's say, more paths to go through to actually justify, why you should get the loan in the first place. But it is totally possible. So it's totally possible. One thing I want to say here also is that you want to start the process as soon as possible if you qualify. So what is the method here? How do you apply for a Parent Plus loan? Let's have a conversation about that. You can usually apply for a Parent Plus loan on the Federal Student Aid, Federal Student Aid website, the FSA website. However, some schools have separate processes, so make sure that you check with your child's financial aid office. If you can apply the usual way, I want you to follow this following steps. So, have your student submit the FAFSA. So, not you, but your student. Okay, you and your child must fill out the FAFSA, which typically becomes available on October 1st every single year. And the cool thing is that this form collects your personal and financial information to determine your family's eligibility for most forms of financial aid. So that's the first step that will actually land you into the whole process. Second, I want you to complete a Parent Plus loan application. So you can find this application on studentaid.gov. So you want to log in with your FSA ID, which is your unique username or password. Username and password for the FSA site. And you need to provide personal details such as your contact information, citizenship status, and employer name. Now, in terms of citizenship status, you can be an American citizen or a green card holder. And you need to actually detail your loan request. So on the application, what happens here is that you need to be as thorough as possible, as comprehensive as possible. You need to indicate how much you want to borrow and the school that your child is attending. If you want to delay payments while your child is in school, you can also request a deferment at that point. And I suggest you do it now at that point so that you know it's done, okay? And then the fourth step, you need to confirm your information is accurate. So you want to read over your application for accuracy. If you spot any errors, correct them before you hit submit. And finally, you need to agree to a credit inquiry and submit your application. So they'll do a hard pull, okay? They'll check your TransUnion, your Equifax, and Experian. And so your final step is to read over all the disclosures and consent to a credit check. Once you submit your Plus loan application, you can track its status within your FSA account. Now, let me talk to you about the Parent Plus loans alternatives. I mean, not everybody can qualify for a Parent Plus loan, okay? I mean, no matter how many times you try, maybe you're just not maybe this loan is not just for you and your child. So the best alternative depends on when your family needs funding. The when is really critical, the timing of the need, okay? If your student is attending school next semester, you are able to compare federal Parent Plus loans to private student loans. Now, the cool thing about Federal Plus loan is that they have a greater variety of borrower protections, including multiple repayment plans, forgiveness eligibility, and forbearance and deferment options. That's really cool because Plus loans, in that sense, can be a critical resource to fill funding gaps. Okay. However, the interest rate, as I think I've said this before, may be a little higher than a private loan in some cases, especially if you are, let's say, if you are a borrower with good credit score. This is not really the trajectory you want to go through. So with a private loan, you can usually borrow up to the school's cost of attendance and choose repayment terms of 5, 10, or 15 years. Some lenders have more options. Repayment protections on private loans are a hit and miss, you never know. However, as many financial institutions only offer to postpone or modify your monthly payments on a case-by-case basis, it's one of those things where you have more protection if you were to go with the federal government's plan, because with the private sector's plan, you just never know. Okay. Now, for their part, some banks, credit unions, and online companies also let you view your potential interest rates online via pre-qualification. In other words, you get a soft credit check that will not harm your credit. So it's worth really reviewing offers to see which loan type will be more affordable to you. So the Federal Parent Plus loan might be better if you want to access multiple repayment plans and forbearance and deferment options. If you could be eligible for the PSLF program and you don't have strong enough credit to qualify for a low rate on a private loan. A private parent loan could be better for you if you have excellent credit and could get a low interest rate. Let's say you have a FICO score that's above 700. If you are confident about your ability to repay the loan in the future, perhaps thanks to your steady income, and you are now pursuing actually a federal loan forgiveness. Another possibility is that if your student is more than a year away from college, you have a different scenario. Let's talk about that. So you want to lessen or eliminate your need for student loans by implementing several alternatives. You want to ramp up your savings. This is actually the opportunity now to really ramp up your savings. You want to assist your students search for aid, and you want to compare and contrast multiple schools' pricing. So when I speak about ramping up your savings, certain investment accounts, including 529 plans, allow tax-free withdrawals when you spend the money on qualified education expenses. So this could be a possibility to actually explore. You could also save money in a high-yield savings account or other vehicle, though an alternative investment account would not offer the same education tax breaks as you would get on a 529 plan. You can also assist your students search for aid. I mean, it's one of those things where you have a lot of possibilities. Sometimes if you don't try, you don't get anything, okay? So you might want to try to see if you could have, let's say, grants or scholarships. I mean, grants and scholarships are a type of gift aid that your child won't have to pay back. So by submitting the FAFSA, your child may actually qualify for need-based federal and state grants. And as you can find merit-based scholarships from local and state governments, private companies, nonprofit organizations, and schools. So the bottom line here is that you want to leave no stone unturned. It's all about exploring all avenues. And you want to compare multiple schools' pricing, right? Cost of attendance at college can vary widely. So it can go from $10,000 at public colleges for in-state residents, and it can go all the way to $40,000 or even $50,000 at private schools. Okay, so you want to encourage your child to consider cost as a major factor when choosing which college to attend. You might talk to them about the option of attending a nearby community college for 2 years, which could also cut their living expenses before transferring to a more costly 4-year school. So this is also a possibility. So bottom line here is what? You still have time to minimize the potentially exorbitant cost of college and the amount you must borrow in student loans. So the more money your family can set aside in savings and gift aid, maybe even side hustle earnings and tuition reimbursement programs, the less education debt you and your child will have to assume in the process. Let me talk to you about the repayment plan here. So let's talk about Parent Plus loan repayment. So what happens here is that when you take out a Parent Plus loan, you can formally request a deferment or a postponement of monthly dues while your child is in school and for 6 months after they are not attending classes at least half time. So you are able to actually ease the pain, quote unquote pain, on your budget. Otherwise, you will start making full payments on your Plus loan when the loan is dispersed. Okay, so it's always a great idea to actually request the deferment. Plus loans are eligible for the following federal repayment plans. So there are actually four programs, 4 repayment plans. You can have standard repayment, graduated repayment, extended repayment, and also income contingent repayment. So what is a standard repayment? So a standard repayment calls for fixed monthly dues over a term of 10 years. That's really good. 10 years, a whole decade. Okay, and so a standard repayment could be a route for paying off your student loans faster if you make larger than the minimum payments. Then you have a graduated repayment. So this repayment also spans 10 years, but you will make smaller payments at first that gradually increase over time. So the graduated plan can cost you more in interest charges than the standard plan, but could be worthwhile if you anticipate, let's say, your income will grow over time. Let's say you're probably thinking you're going to school right now yourself as a parent, and you probably hope, like, in 2 or 3 years from now, you'll get a better job, a well-paid job, and you'll have more money to actually allocate to the repayment of the loan. You also have an extended repayment plan. So this gives you up to 25 years to pay back your Plus loan. You can choose fixed or graduated repayments. The longer term allows for the unrelenting pileup of interest, but it could make sense if you are pursuing PSLF or another loan forgiveness program. So something to really think about, especially if you're trying to consolidate, let's say, the family budget and really have a clear idea about where your money is going. And what about an income contingent repayment? This adjusts your monthly payments to 20% of your discretionary income while extending your term to 25 years. If you still have a balance at the end, the rest will be forgiven. And Parent Plus loans are only eligible for this plan if you consolidate them first with the Federal Direct Consolidation Loan. So in conclusion to this conversation, I spoke to you about Parent Plus loans. I gave you the approach, the method, and now the conclusion. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.